Hello, ladies and gentlemen, and welcome to FaceTime with Leaders, an initiative by World Development Corporation. My name is Tanay Ol, and I'm an anchor at World Development Corporation. FaceTime with Leaders is a platform for industry veterans to come together to share their knowledge, ideas, thoughts, and best practices with one another, as well as with upcoming future leaders. In a nutshell, we attempt to encapsulate the multi-decadal learnings of all our industry stalwarts. We hope that by conducting these FaceTime with Leader interviews, we can bring together a global community of eminent personalities. By bringing together such visionaries on one platform, we hope to play a part in inspiring the lives of other leaders. Great learnings from great leaders undoubtedly assist everyone as they help us to identify, nurture, and work on trade secrets that have already proven a success formula for so many. And this is what we aim for with these sessions by making them a gathering of industry stalwarts and a knowledge sharing community. We have one such corporate titan on FaceTime with leaders with us today, Mr. Ashwini Kumar Shukla. He was most recently the Chief Risk Officer at Central Bank of India, standing as a distinguished banking professional with nearly 4 decades of comprehensive expertise in various facets of the banking industry. His illustrious career exemplifies a unique blend of operational acumen, risk management proficiency, internal audit leadership, treasury operations finesse, and a deep understanding of corporate and retail credit. His journey in the financial sector has been characterized by an unwavering commitment to excellence, ethical values, and an unshakable resolve to navigate the complex financial landscapes both in India and on the global stage. So, Mr. Shukla, to begin with, could you let our viewers know in brief about your career journey so far?
Thank you, Tane. Thank you for providing me this opportunity to be able to address so many people. In fact, as you said, I was still recently Chief Risk Officer with Central Bank of India. So I demitted office in August 2023. And to recapitulate my journey, I started with State Bank of India in December 1984. So it was almost 39 years of service in the banks, mostly with State Bank of India, and then 3 years as Chief Risk Officer with Central Bank of India. Now, with State Bank of India, I joined as probationary officer in December 1984. And State Bank of India has got a rigorous system of testing and training. So after State Bank of India has got different tests altogether for selecting the probationary officer, that is one thing. Secondly, their training system is also different. They provide intensive 2 years training so that the probationer is exposed to all facets of the banking areas. So to begin with my journey, I started my journey on 3rd of December 1984 by joining a branch at Almora, which at that time was in Uttar Pradesh, as I was in Lucknow at that time. So which was at that time in Uttar Pradesh. Later it became Uttarakhand. So there we had a general banking training. After that, SME training, then corporate banking training, then foreign exchange training. So across in the span of 2 years, I had a intensive training across all the facets of the banking, not only on the job training, but also the bank provides in the classroom training at various centers. So I had training at the Apex Training College, which is located in Gurgaon, now which is known as Risk and Compliance Institute. At that time, it was staff training college, and then staff training centers located at Guwahati and Jammu. So all these places we had various trainings. So after 2 years of training, in fact, I'll tell you that I was really fortunate that SBI provided me so much of opportunity to learn across various facets of banking. After my confirmation, the first job or first posting that I got was in International Banking Division at Varanasi. Varanasi is a tourist center. Varanasi is export hub because of the carpet. Its hand-knotted carpets are famous world over, and they are exported all over the Europe and to US. So I was there. I was actually dealing at various levels at International Banking Division, starting once one joins at IBD, first thing that is given is that they have to actually attend to the tourists. Tourists will come with the traveler check and currency note. At that time, there was no credit card, nothing like that. So it was currency note, exchange of the currency note, that is foreign currency notes, and the traveler checks. So that was the initial thing. Then after that, I got into export. I was heading the export division, then import division, and then field officer. Field officer, what you call as now as relationship manager, and credit analyst, relationship manager, everything rolled into one. That was field officer. So there I got my foreign exchange training, and then not only foreign exchange training, that was also that was the place where I was able to get the credit training, because at that time these exporters, they had huge limits. So we were doing the credit analysis and not sanctioning the limit, we were recommending the limits, and those limits were being sanctioned by the appropriate authority. So this way, I was actually heading. After that, I was heading various categories of branches for almost 10 years. These were not only personal banking branches, but there were also export-oriented branches. All these branches were there. So till 2003, from 1987 till 2003, I was in various branches. In fact, I was in the IBD till 1993, and after that, I was heading for 10 years various branches. Later, I actually was transferred to a foreign department, Calcutta, which has treasury operations. Treasury operations, foreign exchange treasury operations. Foreign exchange treasury operations for SBI were at that time taking place from Calcutta, and the domestic treasury operations were from Mumbai. So this treasury was split in SBI at two places, that was Calcutta and Mumbai. So I was there for quite some time. I started with the system procedure division of the foreign department, and then I was back office in charge, and then I was in charge of the treasury and the balance sheet of the SBI. If you remember, you may recall that in 2000, SBI embarked on the journey of merger of the associate banks. It had 7 associate banks. And the first associate bank got merged into SBI was in 2008. That was State Bank of Saurashtra. So that was the first, that was the smallest bank. So SBI started with the smallest of the 7 associate banks, and that was the bank that got merged in 2008. So I was actually handling the foreign exchange merger business of the State Bank of Saurashtra with State Bank of India. So that was an incredible journey where I was able to learn. I had actually working the branches, I had ample opportunity and ample knowledge about working on the foreign exchange. But then once you come to foreign department, you know how the cover operations take place, how the trading takes place. This I'm talking about the foreign exchange and derivatives related to foreign exchange, which at that time were not many derivatives. And suddenly, if you may also recall that 2008 actually, a great financial crisis came, which in fact started from September 2007. 2007, it was Merrill Lynch, if I remember correctly, was Merrill Lynch, one of the investment banks that actually was in problem, and that got merged. And then after that, in March again there was, and then the financial crisis came in 2008 with the Lehman Brothers. At that time, I was actually in charge of placing all the funds with various. We had almost on a daily basis, we had half to $1 billion that was being placed across various other banks. So, in fact, we were doing it. Bank of America was our correspondent. So we were placing all these funds with Bank of America. But suddenly one day I thought that, okay, what? At the time, you were not sure that which bank is going to go down under. Wells Fargo was in problem. Bank of America was never in the problem, but Citi was in a problem. So then we thought, let us not place anything with Bank of America. Let us place everything with New York. So that was also a harrowing time when we went through during great financial crisis. Before that, in fact, if I will just go back, you may remember that Chandrasekhar during 1990, Chandrasekhar was our prime minister. After that, Narasimha Rao government came, and Manmohan Singh, Dr. Manmohan Singh was the finance minister. At that time, India's foreign exchange position was precarious, and lot of new restrictions were being put in place. At that time, we didn't have any internet and government notifications. In fact, for opening of the import LC, so many restrictions were being put in place each day. Means the margin that is normally 10%, if you are opening a letter of credit for 100 rupees, the margin that is required to be kept is 10 rupees. So that margin was increased up to the level of 200 rupees. So if you want to open a letter of credit for 100 rupees, the margin was 200 rupees. And nothing like internet or anything. So based on the newspaper reports itself, we were increasing the margin because the government notification, the printed copy of government notification took its sweet time to come. It is not that 200% was increased in one go. It was increased to 25%, 50%, 100%, then 200%. Of course, for exporters who had some license, import license, these margins were not applicable, but for other importers, so all these prices, and then after that, other crisis that I witnessed during my journey was Y2K. Y2K was when year changed from 1999 to 2000. So people said that computers didn't have ability to roll over to 2000. The date was scheduled in such a way that no one was aware that what is going to happen at 12 o'clock in the night on 31st December, 1st January and 31st December of 2000. So all the computers, everything was ready. And actually, Indian technocrats had a gala time fixing this Y2K bug, what was called. So that was again, it has been an interesting journey. During that period, also Euro came. Before that, all the countries had their different currencies. So Euro started in 1998. 1998, it started, it was initially they issued for certain transactions, then currency, and then for trade finance and all the, everything was submerged. And then from 1st January 2001, I think, they started with full-fledged Euro. So all these things actually went into journey. And then when I came to foreign exchange department or foreign department, not foreign exchange department, foreign department, which is foreign treasury or SEBI. So that was the time when actually that was the time when I was actually understand the market operations, that how market operations take place, and how the treasury operates, how the branches are who are doing the transactions, those transactions are covered. So that was also quite interesting, and that was a learning which I was able to get. And again, I'm thankful to SBI for providing me such an opportunity. I was there for 6 years in the treasury. After that, I got an opportunity to work overseas. I was posted at Bahrain, initially as internal auditor of the Gulf region, and later as CEO and country head of Bahrain operations. So internal auditor in the Gulf region, we had in Bahrain itself, we had 2 branches. Then we had a branch in Muscat, we had a branch in Dubai. We were in the process of opening the branch at Qatar and Jeddah, that is Saudi Arabia. Doha, we were opening branch at the Qatar Financial Center, and Jeddah, we were in the process of opening the branch. So there, as internal auditor, I was required to audit on a quarterly basis the wholesale banking and retail banking operations in Bahrain, and then go on a quarterly basis to Dubai as well as to Oman. And whenever if something was required or interacting with the regulator was required, interaction for opening the branch at Qatar, because Qatar required assurance from the internal auditor. Jeddah, there were some issues because Jeddah, what happened that SAMA initially did not say so, but afterwards SAMA decided that okay, that whichever are the foreign banks they are who are operating from the Saudi Arabia, they will have their data in Saudi Arabia. None of the granular data will travel from Saudi Arabia to, which was not the case in any other country. This was the repercussion of 9/11, wherein all the data, all the financial dealings of the Saudi nationals who were involved in that act of 9/11, US agencies could actually get from their SWIFT, which was located in USA. So they said, no, nothing, only consolidated data will go. So then that got delayed because we had to provide for data center in Saudi Arabia. And if you wanted to have a ATM operation, then ATM switch was also to be located in Jeddah. So Saudi Arabia, of course, it started with I think quite late, is sometime 2012 or 2013. So these were the branches that I was looking after. Then I got an opportunity. I was actually approved by CBB, Central Bank of Bahrain, to head the Bahrain operations, which was retail branch was separate and wholesale branch was separate, as CEO of WBB and country head of Bahrain operations. So I was there for almost 5 years in Bahrain. And after Bahrain, I came back to India, and then I was actually I was posted as head of market risk of Indian operations. So head of market risk. In fact, during Bahrain also there were 2-3 crises which actually took place. One was Iran. Iran, we had very close relations in Bahrain with in Bahrain. We had with Iran. Iran central bank was placing quite a lot of funds with us, and suddenly US had already actually said that okay, US had set in place all the embargoes and all the no funds could be directed through US system, but then we were doing it in euro. Then euro also actually ceased these operations, so then we had to return the fund. And then during those times only this Arab Spring operations, Arab Spring came up, where in Libya, Syria, even Bahrain was impacted. It started with Egypt. Egypt was also part of the Mewana region, that is Middle East, West Asia, North Africa. We had a representative office in Egypt. So there again, banking was challenged, because in Bahrain also this crisis took place. Because Bahrain is what is happening, that Bahrain is ruled by Sunni rulers, and around 60% of population is Shia. So there also these problems took place. So there also we had the challenge carrying out the operations. Then there was Tapa tantrum and great financial crisis continuing. And then we had again problem regarding Tapa tantrum, getting the fundings. So that all those things. And then when Mr. Rajan came as governor, he came out with special India bonds, special FCNRB bonds, FCNR bonds, special FCNR bonds. So there we were able to raise substantial amount even after having this Tapa tantrum and all those. So when I came back, I was posted as head of the market risk, which position I was there for around 3.5 years. During that period, in fact, again there were issues, and SBI actually there were issues in the banking sector, and somehow their confidence in the private sector was their confidence was level was going down. So there was a lot of inflow into the books of SBI. Deposits were flowing like anything. Now, when a depositor comes to deposit, you cannot turn away a depositor. And suppose today I come and deposit 100 rupees, bank is not in a position to deploy it immediately as a loan to because after keeping CRR etc. there is 70 rupees you have to deploy, 70% you have to deploy as loan, and if you're not able to deploy as loan, then that will come as investment, because you have to go and invest in the money market or the government bonds and all this. So there also what happened then, when the deposits started coming in, then the treasury book started going up. The treasury book, which was around 5 lakh crores, that slowly went up to 10 lakh crores. And we had to increase all our limits and then all those things, because for 10 lakh crores, the limits, whatever we were having initially. So that was again a learning experience, that how to go about it. So many things we did. After that, for around 15-16 months, I was heading one of the networks in Bhopal that was having around 585 to 590 branches and a staff strength of 5,000. That was purely retail business, retail operations, retail lending, SME lending. So that was pure retail operations. But then again, bank wanted me to come back to risk management department. So I was brought as head of credit risk at risk management department in Mumbai. There, there I was there for around, I came in June 2019 and I was there till July 2020. 2019, what happened, that to strengthen the governance practices of public sector bank, our esteemed Honorable Finance Minister, Mrs. Nirmala Sitharaman announced that public sector banks will actually take the chief risk officer from the market. So Central Bank of India was one of the first banks to come out with the advertisement for recruiting chief risk officer. I applied for this position, and then I was selected for the chief risk officer's position. And when I joined, this was a 3-year contract. I joined in August 2020 and continued up to July 2023. And here I had the entire portfolio of the risk, head of the risk reporting to me, starting with the CISO, that is Chief Information Security Officer. Then fraud risk was under me. Of course, credit risk, market risk, operational risk was under me. Liquidity risk was there, enterprise risk was there. So entire gamut of risks, I was able to have a look, give an understanding, and then provide a direction to the bank. So this has been journey so far. It has been actually financial journey, and I loved every part of. I won't say that I did not love this assignment. In fact, all the assignments were enriching, and I loved each and every part of my journey till now.
So you have extensive experience in internal audit, particularly in the Gulf region. Could you share some of the unique challenges you encountered while ensuring compliance with international and local regulations, and how you manage them?
Yes, as I said that I was posted as head of internal audit for GCC branches, and I was stationed at Bahrain. Prior to my going to Bahrain as internal auditor, I hadn't done any internal audit work. But bank, of course, before sending me to internal audit department, provided me extensive training, not only classroom training, but also interactions with the previous auditors who had been there and all those things. So when I joined Bahrain as internal auditor, at that time there was an external agency that was performing across all the branches. It was external agency that was performing the internal audit function. Now, external agency was actually one of the big four auditors, normally one of the big four auditors, stationed at Bahrain or Oman or Dubai, whichever place they were. So what had happened that they were quite familiar with the local regulations. Now, one thing that is there, when you are an internal auditor or when you are a branch of a or even subsidiary of a bank operating outside, then you have not only to comply with the local regulations, that is the host country regulations, but more important, you have to comply with the home country regulations as well. Now, all these external auditors who were actually local auditors, they were well aware of the host country regulations. Like the internal auditor who was sitting at Bahrain, they were well aware of what are the regulations of the Bahrain, but that is CBB, Central Bank of Bahrain regulations, but they were not aware of the regulations of the Reserve Bank of India. That is one thing. Secondly, they were also not aware of the policies of the bank, internal policies, and because if you have, I'll take an example. You have a loan policy. Loan policy, each of the foreign office will have its own loan policy. But then that loan policy will flow from the mother loan policy of State Bank of India. Nothing in this loan policy of any foreign office can be contrary to the mother loan policy of State Bank of India as a whole. Same way with the investment policy. All those things are treasury policy, everything. So, okay, they will see that, okay, this is they're in the policy, this you are doing. So, if you ask me what was the biggest challenge when I joined as head of internal audit at Bahrain, at the time regional office, I joined at Bahrain because regional head office for this Mewana region, which I said Middle East, West Asia, North Africa, was in Bahrain. Later, it was transferred from Bahrain to Dubai. Right now, it's in Dubai. So when I joined, so first was the issue about making the internal audit plan. Internal audit plan incorporating host and home country regulations for all the, at the time, these three jurisdictions were there: Bahrain, Oman, and DIFC. Qatar had still not started functioning, and Saudi Arabia also was not functioning. And we didn't have any branch in Kuwait, that is GCC. Though we had a representative office in Ankara and a representative office in Egypt, but then that was just representative office. They were not doing any transaction. They were just booking some business. They were just licensing office, what you can say. So there was no requirement of internal. So our biggest challenge was to have this internal audit plan, because whatever internal audit plan prepared by previous external people, that was of no use. So prepare that internal audit plan, incorporating the host and home country regulators. First thing is that when you are actually being appointed as a internal auditor, you have to get the approval from the regulator of that country. So initially, I had to get the approval from the CBB, Central Bank of Bahrain. So because of my background, I think I was chosen as internal auditor because of my extensive background in foreign exchange, trade finance, and credit. These are the mostly things that are being performed at the foreign office. So because of that, I was able to get the approval from the Bahrain regulator, later CBO, that is Central Bank of Oman, and DIFC. Dubai, it was actually Dubai offices in DIFC, Dubai International Financial Center. So there is a separate regulator for that. So I was able to get the approval from all these regulators. Then after that, basically to prepare these plans, incorporating for each of the jurisdiction, home country and host country. Home country, okay, across all the three jurisdiction would remain unchanged, but host country regulations change. So these were three separate internal audit plans. And then getting the audit, conducting the audit, and then wherever was the issue, asking the management to take the corrective actions. And of course, interactions with the local regulators, because at least once a year, the regulators they didn't want each quarter, but once a year they wanted that there should be an interaction with the, like in Bahrain, they wanted on a half yearly basis, but the IFC and CBO, they wanted once a year. So during that period, not to project that there are some issues with the branches, though it wasn't that, but you never know what local regulator is going to take. So you had to actually tread a very have a very fine balance that, okay, you actually don't cause any concern to the regulator. And there were some things which were quite new internationally, if you say. This means in India, we had not launched such things. Like for project finance, we were doing project finance in India, but abroad, these equator principles for the project finance had come quite back. And when you were evaluating the project finance, these equator principles actually came into picture. And these were what you call as ESG principles, environmental principles, not social environment, but environmental and social principles. You have to take care of that. Then other thing which is very common nowadays in India also it is RBI is put in place, but at that time it was not there. Means at least domestically RBI had not started. That was ICAP, Internal Capital Adequacy Assessment Process, which again was a document that was required to be drawn, and then how to go about this. So all these international practices, how to go about this, then local HR practices. When you are an internal auditor, compliance officer is a different thing. But when you are internal auditor, you have to also see that there are policies, HR policies. Each of the office has got HR policy, which is in compliance with the local regulations. And then HR practices are being followed as per whatever is the local regulation, and it is being adhered to. So all these challenges were there. And these were three different jurisdictions, as I told, and then Indian jurisdiction also you have to take care of. So that was 4 jurisdictions you have to take care of. Now, it was not only as an internal auditor who I was stationed there, also home office inspection used to take place. That was one thing. RBI also started coming and inspecting the foreign offices. So you can understand it was not only, and definitely the regulators who are there were inspecting on a yearly basis each of the foreign office. So all these compliances were quite a challenge. I'll not say challenge, but a demanding task, which actually I was able to fulfill quite satisfactorily. And then that's why I think I got a opportunity to work as CEO of WBB and country head of Bahrain office.
So, as a recognized expert in risk management, what do you believe are the key challenges and opportunities for banks in the evolving financial landscape, particularly in terms of risk mitigation and digital banking fraud prevention?
Digital banking fraud prevention, yes. But if you ask me what are the risks that are being shown, are being seen in future, so if you see, if you take up any of the reports, and I'm talking from the WEF report, World Economic Forum, and any other report also, the predominant risks that are coming out is the environmental risk. Now, if you see this 2023 WEF report, they have given two horizons, 2-year horizon and 10-year horizon. Now, in 2-year horizon, of the top 10 risks that they have identified is 5 are the environmental risks. The top risk being the cost of living, disparity in the cost of living. That was because of the pandemic. There was so much of challenge and poor getting poor. So for 2-year horizon they had given. But then if you go to the 10-year, out of 10 risks, six risks are relating to environment, and top 4 risks are ESG risks. So as a risk expert, in fact, or a risk, not expert, I'll say risk practitioner, I'll say as of now, and in fact we are seeing its effect now. We have been seeing, right now I am in Noida, so, and you must have heard that there has been a lot of talk going about the smog and all those things. In fact, today I'm checking the AQI in Noida, it is 500, and the index is 500. Beyond 500, there is no index. So AQI, which normally should be less than 100, is AQI is 500. So that again is an environmental risk. So I think the biggest risk, and many of the people tend to agree, and Reserve Bank of India and all the regulators are working towards, and so opportunities for the bank is basically that, okay, we should look at the environmental, social, and of course governance, ESG. Environmental and social are the two things. Social, yes, CSR activities and social banks have been working on, but environmental, I still think that there is a lot to be done, because we are still financing the coal-based projects. Okay, that is government's priority. But then when we are financing, we as banks should actually insist that adequate safeguards should be put in place while financing these projects, or cement plants, or clinker units. So environmental risks are the biggest risks as of now, and already 1.5 approximately temperature rise of around 1.5, and by end of century it is projected that if we go at this pace, the temperature can rise up to 3 degrees, which would be catastrophic for the world. So as a risk practitioner, I would say as of now, environmental risks are the biggest. After that, of course, next is what people say, banks have now become actually IT shops providing banking service. Now, without IT, you cannot imagine banking to take place.
Yeah.
And if you actually do not provide digital products, you do not have these IT backbones, then you will be left behind, and the customers will leave you in droves. In fact, when we joined the bank, everything was manual. Now, hardly you find anything manual. including the employee roles, payment, HR, everything, not only for the external customer, but internal customers also. All the regulations, everything are on the web, internal web. So all those things are there. So when you're talking about the digital fraud, of course, digital frauds have risen. Digital frauds have risen to a large extent. In fact, things that we think are secure, like this is Aadhaar. You might have heard about the Aadhaar-enabled payment system, that is AEPS. AEPS is a payment system which actually authorizes the payment on recognition of your thumbprint. So that is basically banks have got these banking correspondents who have got these thumb impression readers. So thumb impression is taken, and based on the thumb impression which has been captured by UDAI, the transaction is authorized. In that also frauds have taken place. Frauds have taken place which we did not imagine. So then NPCI said that how these frauds have taken place. So most probably the fingerprints have been lifted on a thin cellophane, and that has been applied on the thumb and used, whether by the banking correspondent or by some mistake. So now what NPCI came out that we will introduce in our application liveliness test. So if only the live thumb is detected by the machine, then only the payment would be made. Then you would have heard about the ATM transaction. ATM transaction, lot of frauds have taken place where actually customers have also lost and banks have also lost money. So as fraudsters are normally a step ahead. And as frauds take place, then banks take corrective action for the digital fraud. And all these frauds, internet banking frauds and SMS frauds, now all these SMS frauds, etc., that are taking place, they are also basically the customers are being duped because of electricity bill getting disconnected and all those things. So how the banks are reacting? Like in Central Bank of India, we had put in place an application which was monitoring on a real-time basis all the transactions, digital transactions 24/7. Digital transaction is ATM transactions, your UPI transactions, internet banking transactions, POS transactions, means card transactions, internet banking transactions, and APS, all these transactions were being monitored. Now, to begin with, we had set rules that, okay, that if normally what we saw that ATM frauds were taking place between 12 o'clock night till 4 p.m. 4 a.m. in the morning. So during that period, if the transaction is happening on a regular frequency, so that transaction has to be declined. All these type of rules that we had put in place, that is already working in Central Bank of India. Next step was that to have a AI in place, AI and that is artificial intelligence or machine learning. Now, machine learning would be basically, now if suppose I'm a old man, normally my transactions will not happen between after 10 p.m. and maybe between 6 a.m. But if there is a youngster, they are actually keeping awake during the night, ordering on Swiggy or whatever they are doing. So during that place also, time also, their transactions take place. So we will build a profile that Ashwini Kumar Shukla's profile is such that normal transactions will take place between morning 6 a.m. till 10 p.m. in the night. And Tane's transactions can happen during the night, maybe predominantly during office hours. He's busy in the morning or whatever. Normally, these transactions take place. So this is the next step that we are going to take. So this is how we are trying to prevent the digital frauds. That okay, with the help of the machine, we'll prevent the fraud. And we have been quite. In fact, this AI-based configuration is yet to start, but based on the rules also, we were quite successful in Central Bank of India to prevent these frauds, or not. It won't be actually to say prevent the fraud, because the rules were so that 2 transactions would be allowed and 3rd transaction will not be allowed. So fraudster is able to carry out 2 transactions, maybe 5,000, but limit the damage done. So, and once we put in place these AI-based tools, we'll be, I think, we'll be able to stop the frauds.
So, how and when did you develop an interest in corporate governance?
Corporate governance, in fact, I found very interesting that corporate governance, if you recall that big roundtable in 2019, US big roundtable, initially, corporate governance is basically how you manage the company, how the company is managed by the management. So, managing the company. Now, company, how you are going to manage? Basically, if I talk about the banking, what is your biggest asset? It is not the IT system or anything. It is your human resources, employees. So, from the time I was brand manager, my focus was that if my employees are happy, then they will be able to make my customers happy. And if my customers are happy, then my business will grow. I do not have to run for the business. By word of mouth, if the customers are happy, I'll get more business and my management would be happy and accordingly shareholders would be happy. And in fact, initially, for quite some time since John Keynes, so it was said that, Keynes' theory was that purpose of a company is to enhance the shareholder value, which actually was changed in 2019, this big roundtable, wherein it was said not only shareholder value, they pointed out it has to be all around. First and foremost is customer, then employees, then suppliers, then the society that we are working in, and then the shareholder. So corporate governance, I got interested in corporate governance, means at the time we did not know about the corporate governance. Basically, it was how to ensure that actually I am able to earn profit for the bank or I am able to grow the business. So that's what I thought, that basically, if my employees are happy, my customers would be happy and our business will grow. First, I came across this word as governance when I was appointed as the internal auditor. Then I joined Institute of Internal Auditor to complete their course. So one of the terms that I came across was GRC, Governance, Risk and Control. And therein actually the formal definition of governance I came to know about. And then I thought, yes, this is what actually governance is. That governance basically is keeping your stakeholders happy, keeping your stakeholders not satisfied, happy. If you are able to keep your stakeholders happy, then definitely your company is bound to grow. And stakeholders is, mind you, in fact, I always thought that shareholders have got the least stake, because okay, if I am a major shareholder, 100% owning, fine. But if it is a public company and I am having 100 shares, 200 shares, 300 shares, okay, if I see that company is not doing well, I can always sell and go. The highest stake that was there was for the employees. Because for employees, if the company shuts down or if the company is in problem, it is not only in India, across the world, if you see, wherever the pink slips are being handed over. Now, day before yesterday itself, that WeWork was one of the biggest IPOs that had come at, I think, 6 years back. They have filed for bankruptcy. There also the employees are having problems. So employees have got the highest stake. So corporate governance are the best practices. And if you ask me when did I got interested, I got interested the moment I took over as a branch manager. It was a small branch, though I did not come across that term as corporate governance or governance, which I came across much later, sometime in 2009, when I had an opportunity to go through the course of Institute of Internal Auditors. At that time, I came across the term GRC, that is Governance, Risk and Compliance. And you see the companies that are having good governance practices, they flourish, and the companies that are not having good governance practices, they actually are doomed. And now best employer and best place to work with, all these things have come which were not there when we were there. But yes.
So, as a corporate governance expert, what values do you bring to the table?
I will not call myself to be a corporate governance expert, but yes, I'll call myself to be a corporate governance practitioner who has practiced this corporate governance now almost for 30 years, because I first took over a branch sometime in 1993. So after that, I've been leading team, yes, during my assignment in foreign exchange, but there were 2 or 3 of my class and officers who were under me, so that was not much. But then once you become a branch manager, that is a position where actually wherein you have got a large teams, fairly large teams working under you. So value, if you say that the value that I bring to the table is empathy towards not only customer's point of view, but also from the employee's point of view. So employee and customer, if you understand both of them, then actually that will solve a large extent of your problems. Now, now this I'm talking from the brand manager's point of view, wherein actually you are playing a small role. Now, as you grow over a period of time as head of credit risk or head of as chief risk officer, then you are interacting with the board, and then there are so many other uh, people who are working under you. Normally, when you are interacting with the board, again, the as a uh, corporate governance practitioner, when you are interacting with the board, basically, okay, it's the board members who have to take a call. But then at that time, you have to ensure that as part of the corporate governance, that all those things, whatever is the right thing, I have been of one view that okay, when I am the boss, I'll listen to the point of view of others, and then it is my decision. And when I am telling to my boss, I have to tell him or her the pros and cons, whether it's board or whether it's managing director or whoever. I have to tell the pros and cons, and ultimately the decision is his or hers, because he or she has to face the consequences of those decisions, because that is his or her decision. So to the board also, whenever there were discussions, I will definitely put across what is the point of view, what is the regulator point of view, and as a corporate governance, our best practices, what we should be doing, and how we should be doing about it. So this is what I bring to the table as a board member or while interacting with the board. And as a team leader, my thing is that listen to the people, understand their point of view, and then take decision.
So, what are some of the most remarkable changes you have seen in your field with changes in technology, and what changes do you expect to see in the future with the advent of all these new technologies like IoT, Web 3.0, AI, blockchain, etc.?
So as I was telling that remarkable changes that have come about is when I joined the bank, it was everything was manual.
Yeah, yeah.
In fact, application of interest was a Herculean task. And then the two Herculean tasks was that not only application of interest to the account, it was saving bank account, whichever account, loan account. Other thing was balancing. What you call is that balancing of the ledgers with the figures that are there in the general ledger, which actually is the balance sheet of the branch.
Mm.
Everything was done manually. Then we started having facet machine. Again, as a credit analyst, when you are having a proposal or when you are writing a letter or when you are sending a proposal, initially everything was to be made by hand. Then you gave it to the typist. Typist will type out the proposal. At that time, If it was a local board proposal which was going to local board or to the central office, that proposal had to be in 7 copies. The 3 copies in yellow, green, and something like that. So then after some time, this electronic typewriters came. In between also, yes, we had a fax machine. Initially, we had this Telex. Telex was basically, you might have seen old telegraph machine that messages were typed out. So at that time, this bandwidth, what you call as bandwidth or connectivity, was very costly. So, but though the people were fast, typists, they were expert typists and they were very fast. But normally, what was being done, that they will type out the message initially. That message typed out, that it punched a hole on a strip of a paper. And when you got connected to the other line, you ran that strip of paper, which was much faster. So your cost was minimized. So we were working at that time. Then fax machine came. First fax machine we imported from Japan for 1,50,000. I'm talking about 1992.
Wow.
Imported machine we didn't have. So that was another change. Then electronic typewriter, then computers came. Then initially we had this Windows, etc. came in 1994. And then we had this standalone accounting system. In SBI, it was Bank Master, means each bank was computerized, but it was standalone. And then we came migrated to core banking. Sometime in 2000, we started migration sometime in 2004, 2003 or 2004. And then it became core banking and bulk customer of the bank. So immense changes have taken place. I saw that people, in fact, were very uncomfortable when the bank master came, but it was not window based. So they were able to learn, okay, F1, F2, F3. So I can go by this, pressing so many keys, I will be able to reach this key. But when the core banking came, which was actually graphic user interface, wherein you had to handle the mouse, they were unable to do that because these people had come from very low ranks and they had never handled. So many changes. Now everything, in fact, you cannot imagine without core banking. The internet banking came, and then apps started coming. SBI was one of the first to come out with the YONO. In fact, prior to YONO, also there was an app that was launched by SBI by the name of Buddy. Buddy was one app that was launched in 2014, but it was not successful. Then SBI launched with YONO, and then other banks came out. Now, the whole of the banking you've got on fingertips. As going forward, of course, blockchain has also come into picture with the trade finance. Now, NSEDL. NSEDL chief is Mr. Devjit Roy Chaudhary, who is another ex-state banker. When I was in Bahrain, he was heading Dubai operations at that time. So they are based on the blockchain technology. They are opening the letters of credit and bank guarantees. Then AIML, I gave you example of the fraud prevention. Fraud prevention is one area wherein AIML will go a long way for the fraud prevention. IoT, I'm not able to recall any application that bank has actually wherein use IoT, because bank basically, even cloud, at least in India, I don't think any of the banks is having any sensitive data which is there on the public cloud. Even if it is on a cloud, it is on the private cloud.
Private cloud, yes.
So IoT may take some time, maybe till such time much more robust systems are built and banks get confidence. Banks as well as regulator gets confidence. Okay, this public, you can keep your data in the public places. Still, RBI has also said that the data should not cross the domain countries' boundaries. Most of the countries are doing like that. So basically, I do not know about IoT, but of course, there are immense possibilities as far as blockchain is concerned. AML is concerned, big data is concerned. Big data, in fact, big data mining is such a big field. In fact, I remember in SBI, we mined this data, and then based on that data, we sent out requests to, we said that, okay, you are eligible for this much of personal loan. That was sometime in 2015 or 16. But then learnings are to be there. So like initially when in SBI we mined the data, we sent out to so many people, and then few of the people took the loan and they never repaid, or they didn't have means to repay. Then we thought what went wrong. So one of the logic that was used, that if during 12 months the total credit in that account was 1 lakh rupee or some amount, then that person is eligible for personal loan. But many times it had happened that there was a student whose father had sent some money, and then or scholarship had come and we had sent out. So slowly big data is there. Data now, so much of data is there. But how to utilize the data and how the rules are to be built. So that again, the bankers are actually having challenge, and slowly we are building those rules. And then on the fly, the loans are getting sanctioned. So except for IoT, I think banks have got really, and I know at least in India, all the banks are working all those things, whether it's blockchain, whether it's AIML, whether it's their big data analytics, whether it's digital banking. All the banks are working, because if you don't work on these things, you are going to be left behind, and your market share is going to vanish.
Yeah. So we're building a community here of industry magnates. The move is meant for cross-pollination of knowledge and building a knowledge-sharing community of corporate giants and industry experts. What are your thoughts about this initiative taken by Mr. Zishan Pathan, Mr. Heval Mehta, and the whole World Development Corporation team?
Yeah, I think that's a great move, because like in my case, okay, there are professionals who move across the industry. But mostly what happens that mostly you'll see that most of the professionals are in their own industry.
Yeah.
Okay, I have worked in banking, so being a credit analyst or being credit sanctioning authority, I have some insight into the working of various industries, whether it's power, whether it's road, whether it's infrastructure. But then what insight I have only as a banker, not as a person who is working in that industry. So definitely the person who is working in that industry and who has put in 3 to 4 decades of service in that industry, the insight of that person would be much more than what I am having. Now I have interacted with so many people, but when they are interacting with me, they will always see me as banker.
Yeah.
And then maybe remain guarded about some information, maybe disclose certain part of information, may not disclose certain part of information. But when such interactions take place, I'm sure they will come out with the ideas, they will come out with the intricacies, they'll come out with the management challenges, they'll come out with the their journey, and that would be a great learning experience for all. And I really think this is a great initiative by Mr. Pathan and Mr. Mehta to go about and bring about, do this such a thing and put it out. So I'm sure the community at large would be benefited to such a great extent that it is yes, it is time taking, it is effort on the part of the World Director Council, but then I think that is a really great service that they will be doing across to all the young and middle level professionals. I'm sure I'm pretty certain that will benefit across to all the people who actually go through all these things.
Great, sir. It was fantastic conversing with you, and I'm confident that your insights will greatly inspire future leaders. Thank you so much for joining us today, and wish you the best for future endeavors. Moreover, trust that this initiative by Directors Institute has unquestionably expanded the participants' understanding and enriched their minds. Thank you so much, sir.
Thank you. Thanks a lot.
Have a great day, sir.
Thank you.